Hey, everybody, welcome back to another episode of the Growth Capital Podcast. I am your host, Justin Dixon, and today we've got Dean Margolis on the podcast. He is the co-founder and CEO of Red Sky Health. Dean is a serial tech entrepreneur, having co-founded a handful of businesses, and his latest one is Red Sky Health, which is an AI platform to help healthcare systems solve the insurance claim denial process, leveraging AI. So a pretty interesting episode. We talk a lot about Dean's early entrepreneurial ventures, how he's really chosen to go down the co-founder path as opposed to trying to be a solopreneur and start his own business. So I think regardless of if you're an entrepreneur or a business operator, I think you'll get a lot out of this episode. So let's get Dean on the pod. Interested in hearing conversations with private equity leaders, CEOs of private equity-backed companies, and startup entrepreneurs where they share their stories about their career journeys, starting, investing in, and scaling successful businesses, and the important role that having the right talent plays in building a successful business, then you are in the right place. Welcome back to another episode of the Growth Capital Podcast. Here's your host, Justin Dixon. Dean, welcome to the podcast. Thank you for being a guest.
Justin, thank you for having me.
Yeah, no, well, let's jump right in. Why don't you give everybody that's watching and listening this a little bit of an overview of who you are, where you are, and what you're up to right now?
Excellent. So I am a serial technology entrepreneur. What I like to do is go out and find people who have good ideas or products as early stage as possible, help them form the company, help them get the culture moving in the right direction, help them grow it. And this is what I've done repeatedly in my career. I've had 3 such startups that I grew that we sold to public companies. And I had one live person, which as president and COO, I helped lead through 4 rounds of venture capital and a successful IPO. Right now, I've partnered up with 2 other co-founders. We've started a company called Red Sky Health. At Red Sky, we're using AI to fix health insurance denials. So our customers are large group practices and hospitals that submit insurance claims to insurance companies. About 15 to 16% of those claims annually are denied, and they can't collect the kind of revenue that they need to provide the kind of healthcare that everybody expects. So that's what I'm up to right now, Justin.
Got it. Well, before we get into Red Sky a little bit deeper, let's talk about your earlier entrepreneurial journey, because I always like to understand people's origin stories and why they start businesses and fund businesses and all that fun stuff. So I guess talk a little about kind of how you decided that entrepreneurship was kind of your path to business and life and all that stuff, as opposed to just going down the traditional, W-2 track.
Well, I started life technical. I actually got a master's degree in computer science a long time ago, but I quickly got away from the technology to selling technology solutions, running software sales forces, and then running software companies. And as the internet came along, it became clear that there was certainly the opportunity to do a lot of new things that the technology enabled. And that's always been my passion. It is so much more satisfying to create a solution where there isn't one, to create for customers an answer to some of their problems, to create a company where people are growing, getting more responsibility, getting more people working underneath them, putting structure where before it was amorphous. That, to me, is what drives me, and that's why I start companies, grow, and build them rather than go take a job on a W-2.
Yeah, no, fair enough. And so I guess as you think about kind of forming a co-founding team, so if anybody listening to this is maybe in a position where they have a great idea, but they just don't have a skill set that is required to take that idea from their brain or from some vibe coding tool to the next level. Obviously, it sounds like you've been a successful entrepreneur. You've also partnered with other successful entrepreneurs and brought your kind of flavor to the pot, if you will. As you think about kind of great founding teams, what are some of the kind of core competencies that you look for when you're looking for, hey, this is a great piece of technology, but also in that person, like what do they need to have or what are they looking for to bring you in to kind of help take it from 0 to 1 or 1 to 100 and all that?
Yeah, I think it's elements of each of the things that you mentioned. First, you have to have a decent idea that can grow, scale, and be substantially large enough so that if you create a investor-backed company, it can grow large enough to return funds to those investors. Then you've got to find people that you can work with. Along my journey, I've found all kinds of people who had great ideas. And when I got down to it, they either had different thoughts on how to build a company, they wanted to own 98% of it and have me own 2% of it, or any other such things that really knock them out of contention. So it takes a while to network and find that. And I'm of the firm feeling that you need a founding team. We've got 3 founders at Red Sky Health. In the past, I've often had 2 founders. There's a great narrative out there right now that you can grow a company with vibe coding on your own to be $1 billion company with no co-founders, no employees, no nothing, just somebody sitting around. In my experience, it takes a very unique person that can on their own create a startup that grows, thrives, succeeds. You need somebody who can both do the technical and product development aspect of things, somebody who can sell and market. There are very few people out there with outstanding skills that are balanced in all these areas that can be a solo entrepreneur and create a multi-million-dollar company or billion-dollar company. So I've always been of the partnering mode. Find people that you can work with, that you can bounce ideas off of. A startup is a roller coaster. When you sell customers, you're going to be quite high. You want somebody to celebrate that with. When you can't get customers, when the product doesn't work, you're going to be on the downside of that roller coaster. It's going to be a bad day. You want somebody that you can call up and talk to about it. I've never been of the mindset that I should start a company on my own with no co-founders.
Yeah, I would say as an entrepreneur myself, the highs are high, the lows are low, and it's great to have somebody other than a significant other to share that with, because while your significant other is obviously along the journey with you, they're not in the trenches with you on a day-to-day basis. Maybe they got their own thing going on or whatever. So I definitely agree that having that support system, having that partner that's kind of in that vested interest with you is definitely a more powerful kind of path forward. Obviously, there's probably people out there listening that are solopreneurs and they're loving life, each is their own, I think. But, I think I'm more along your mindset of let's partner. Let's, 1 + 1 is 10, not 2. And let's continue to grow together. So awesome. Let's talk a little bit more about Red Sky. So give us a little bit of context on kind of how it started, like where did the Red Sky kind of idea come from? And then I think you said that you're selling this into large insurance companies. So maybe just kind of walk us through how it got started and kind of who's your end customer.
Yeah. So one of my co-founders is a guy who moved his family from Northern Jersey to Cleveland about 15 years ago. When he got to Cleveland, he decided a good way to make a living would be to buy up group medical practices and medical billing companies, with the idea that he could improve their operations and then flip them, sell them for more money, like a lot of private equity groups are trying to do right now.
Yeah.
So he started down that path, and what got in the way of him improving their operations was all these health insurance denials. In other words, he acquired a number of practices. They submitted insurance claims. They couldn't collect the kind of revenue that they expected to collect because a lot of these claims were denied. So my co-founder has been trying to find a way to solve this problem for 15 years, and he's done that in several different ways that didn't quite work. The first way is he put a call center in India. He had people calling U.S. insurance companies to try to, on behalf of his practices, figure out why the claims were denied and how to fix them. That didn't work because the insurance companies, customer service people, they don't know why the claims are denied either. The next thing he did was he tried to systematize and track these denied claims. He's not technical, so he taught himself a no-code solution. These no-code solutions are linear, rules-based systems where it's impossible to do data analytics and pattern matching and see. So it's only when the 3 of us co-founders got together, we realized that AI, which is adept at seeing patterns in large data sets and adjusting accordingly, was the way to solve this problem. That's when we founded Red Sky Health. Now, our customers are large group practices and hospital networks. They submit claims today to the insurance companies. The industry average is that 16% of these claims are denied. Most of our customers are above 20%. So if you have 20% of your claims denied, literally you're losing 20% of your revenue to a process that is manual. A lot of these people have medical billers who take the doctor's notes, type them into systems to form insurance claims, which are sent off to be paid. These claims are denied. They can't figure them out. They try to figure them out manually, which never works, because what's happening is you have a medical biller who input the data. This is usually a low-level data entry clerk. You're telling that medical biller, the claim got denied. Can you figure out why it's denied and how to fix it? So now you're asking a low-level data entry clerk, somebody who, if in the US, they're making $15 to $20 an hour. If they're in Chennai, India, where a lot of this is outsourced to, they're making $5 an hour. You're asking that person now to do data analytics, to do data analysis, to look at a record of 60 fields of data, figure out which field is wrong, what has caused the claim to be denied, what that field should be changed to get the claim paid. Needless to say, they're not very good at that. As a result, today, 60% of these denied claims never get resubmitted, which is amazing if you think about it, because it's hundreds of billions of dollars a year. Just to give you an idea of the size of this business, there's $5 trillion of claims submitted every year to health insurance carriers in the US. This includes the private carriers, Medicare, and Medicaid. The average is 16% denials, which would be $800 billion a year. Many of the practices and hospitals we're dealing with, they're above average. So it's a large business. There's a lot of solutions that we can bring to these practices and hospitals to get their claims fixed and automatically resubmitted and paid. And that's what our business is in a nutshell.
And so does it take the data entry clerk job away, or does it essentially take that post data entry error potentially and kind of figures out where the error is, how to fix it, fixes it, and then resubmits it? Is it that kind of downstream?
It is the latter.
Okay.
That billing person is still going to be required to enter the data, to take the data from the doctor's notes, type in the claim to be sent off to the insurance company. They are going to continue to do that. However, a lot of times today, they're sent the denials and they're told to fix them. Now, many people never even do that. They look at the denial, they can't fix it, or they tell their billers, make sure you get today's claims entered. Then when you have time, go back, if you have time, and do yesterday's denials or last week's denials. When it's phrased that way, they never find the time to do it.
Right.
So we're not taking their jobs away. We're actually having them focus on what their real job is, rather than trying to turn them into something they're not.
And then the solution kind of comes into play because the high denial rate, 16 to 20%, but also you said that 60% of the denied claims do not get resubmitted. Is that just because the person submitting the claim just doesn't want to go through the hassle, or like why would that high non-resubmittal rate be there?
There's a number of reasons for it. First, a lot of small practices don't have the resources to chase after every last denial. If you're doing it manually, it can take hours to fix a denial. You have to look at the claim. You have to figure out which field is wrong. You have to find what that field should be. Sometimes you have to call the insurance company to get more information from them. You have to look at the patient's record. You have to look at a number of things. It's a very difficult process to do. A lot of practices either put their denials aside and don't touch them, or they tell their billers, if it's a denial over $200, pay attention to it. If it's under that, you don't have the time, don't bother. Creating a huge long tail of denials, $199 and lower, that never even get touched. And the good news is that our product, which we've lovingly named Daniel, which is a play on the word denial, it can look at all those claims that are too small in dollar amount for you to do and fix them and resubmit them in no time at all. It doesn't need the time that a human being would take. It doesn't need training. It doesn't leave the job or go take another job or take a vacation or out to lunch or any of those things that human beings do. It is a process that is not a good use of a human being's time. It is far better suited to a software product, specifically one that uses AI so it gets better and better over time. That's exactly what we're pitching. And that's why a lot of these claims today never get resubmitted. They don't have the resources, they don't have the expertise, they don't have the time, and they also have a limited amount of time to get it done. The insurance companies give you 90 or 180 days to get the claim submitted correctly. After that, even if you get it correctly submitted, it's what's called untimely, and they will not pay it.
So if you get into a customer, what is the setup scenario for you to say, yep, we're signing this customer up till Daniel is starting to actually run automatically? I'm assuming there's some type of setup, training, learning that needs to go on. So it's not just like plug and play and then you start getting automatic resubmittals.
There is, and we've come to this over time to getting it to where it is today in a much better shape than when we first thought about this. So we operate outside and independently of a practice or hospital's revenue cycle management and billing workflow. In other words, people assume when they hear what we do, oh, you have to integrate with systems at the practice or hospital. Actually, that's not the case at all. When we sign a customer, the first thing we do is tell that customer, send us a back dump of 2 years of your data. So we will add that back dump of 2 years of their data to the corpus of community data we already have, so that day one, when we start fixing their denials, we not only have the community data, but we have their data, and we've learned a lot. Our product, Daniel, has learned how they submit claims, why claims are denied, how to fix the claims on their own data. We then take a daily cadence of a feed. We take both the claims and the denials every day from our customer. Daniel looks at the denials, compares them to paid claims, past and present, does a number of other analyses, table lookups, and it comes up with the best way to fix the denied claim. It gets it fixed, automatically resubmitted, and paid. The next time the customer sees that claim, it'll come back to them as a paid claim. It'll go on their dashboard so they can see, oh, Red Sky Health got $1 million of claims paid for me last month, and here are those claims. And we take a percentage of that as our fee. So by not having to integrate with the systems, all we need to do is take a feed from them, and we take a feed in the same format they used to sending claims to the insurance company, so they already know how to do it. We can operate independently. We're kind of like a high-end collections agency, if you will.
Yep.
A collections agency, when somebody hires them, they don't go in and integrate with systems. They take the claims and they call people and harass them, as I guess that's how they operate. We don't do it that way.
Right.
We take the claims, we analyze them, we use AI and machine learning and other things. We get the claims automatically resubmitted and paid. But we don't have to integrate with the customer. As a result, we can integrate and start going with somebody in just a few short months. And I say months because the way Daniel works is it's an AI product and machine learning product that learns. We know what we tell customers. The first month we put it in, it'll be good. The second month, it'll be very good. The third month, it's going to be excellent. The fourth month, it's going to be brilliant. Now, why is that? Think about this. Everything Daniel does, it learns from. So if it looks at a claim and says, the best way to fix that claim is to do ABC, it resubmits it. It tracks that. That'll go back to the insurance company. They will re-adjudicate the claim. It'll come back to the practice. We will then grab it and send it right back to Daniel, which will look at it. If the claim is now paid, Daniel knows its recommendation was a good one. It will increase the score in that recommendation, so it's more likely to happen again when the next time that kind of denial comes around. If, on the other hand, the claim is denied again, Daniel will decrease the score. So that kind of denial will be fixed with another kind of recommendation next time around. So it learns, and it doesn't learn just at your speed and my speed. It learns at machine speed, tens of thousands of times a day. So it very quickly gets better and better at fixing denied claims. And we tell customers, don't judge it by the first month or two. Wait 3 or 4 months, then you'll see exactly how good it is. And that's how we work.
Yeah. And I guess for them, there's no upfront cost, right? So if you're just getting paid based on claim that they probably wouldn't submit anyway, and if they did, it would take too long and they'd spend money on, people's hours and time, whereas you're just kind of replacing, I guess, are you also just kind of replacing a traditional revenue cycle management company that does this, but does it more manually because they're kind of calling on, or is that a different process to more collect on things that are unpaid?
The classical revenue cycle management companies, they give you software that allows you to enter claims, and they do billing for you. So we don't replace any of that. We come in afterwards and get your denials fixed, resubmitted, and paid. A number of rev cycle management companies have approached us because they figure if they can get more of their denied claims paid, they can be doing a better job for their customers.
Yeah.
And you're absolutely right. We used to charge a per doctor per month charge. We've now gone to a percentage model, which works much better. In fact, Red Sky Health was just written up by the Gartner Group, the well-known software analyst, as the poster child for the new AI business model. Gartner wrote, "Software as a service is dead. The new model is outcome as a service," and they use Red Sky Health as a shining example. It was great publicity for us because Gartner normally writes up people like Google, Facebook, Salesforce, large publicly traded companies that everybody knows.
Yeah.
It gave us great publicity, and we actually got a number of prospects and customers out of it, which was good.
That's awesome.
But that's exactly how we work. And it works very well because it aligns us and our customer. We're not charging them any upfront fees. They never have to worry about, is it going to work for them or is it cost effective? Because we take a 20% fee. So we have several practices. They were about to sign with us and they said, well, I like the concept, but will it work for my practice? And I told them, you don't have to worry about that.
Right.
20% of zero is zero. If it doesn't work for your practice, you're not going to pay us anything.
Right.
We are at risk, so to speak. We are your partner, and our goal is like yours, to get as much of your denied revenue back in the door as possible.
How long does it take for a denied claim, once resubmitted through Daniel or through traditional processes, to be identified or to be either paid or kind of re-denied? Like, what's that lag time?
So the insurance companies generally take a week or two to adjudicate a claim, whether it's a claim being submitted for the first time or if it's a claim, like in our case, being resubmitted because it was originally denied. Sometimes it'll take longer, but you can figure on a week or two.
Got it. And where is the business now? Like, where, obviously you started it a couple of years ago, it looks like, at least according to LinkedIn. Like, where's the business? It sounds like you're growing and you've got customers, but yeah, share a little about where it is.
Yeah. So we started the company a few years ago. We've raised an initial round of financing when we got started, and we're raising another round right now. We have a number of customers. We proved the model when we brought out the product in late 2025. We proved the model with a number of small practices, and that worked. Now we have a number of large practices and hospitals that we're starting to work with, and it's ideal for them because they have a large number and dollar volume of denied claims. They can't get them collected. We can come in, work with them, figure them out, get them resubmitted, approved, and paid. And that's where we are today. The company is at an inflection point. It's literally doubling in revenue every month. So we're in the growth phase right now, hiring new people, bringing people on board. It's actually quite refreshing. I'll be honest with you. In my past, the way I would do a startup, Justin, is I would put an office in Lower Manhattan. Like we identified before the call started, I'm a New Yorker.
Yeah.
So when you put an office in Lower Manhattan and you have a startup, who are you going to hire? You're going to hire people in the New York, New Jersey, Connecticut area. These people usually are high-priced people because they live in high-cost areas. And there's only a limited number of them. It's a small subset of the general population. Post-pandemic, we don't do things that way. Red Sky Health is a completely remote company. We have people in a number of different states. We have people in Europe, South America, and India. We have a far better team than I've had before in any startup, including the one I took public. Why do I say that? because we hire the best people. We don't worry about where they are geographically. And as a result, it's gotten going. We have a great culture, a great morale. Nobody's ever left Red Sky Health. Everybody who works for Red Sky Health has Red Sky Health stock options. They want to see the same things that the founders and the investors see. They want a company that's growing, that eventually, after a number of years, can either be sold or taken public. And that's the excitement of a technology startup and what we have right now. People love two things about our company when they join us. One, we're allowing healthcare providers, doctors, whether they're in group practices or hospitals, to collect more of the revenue that they're entitled to collect. Therefore, they can provide better healthcare, which is a good thing. And two, we're like a traditional technology startup. That's how we've been architected and arranged. So everybody in the company has Red Sky Health stock options, and they want to see the company grow, thrive. They want to see the same kind of exit that an investor would want to see.
Yeah. And obviously we're recording this in late April 2026. I guess, where do you see this going in the next, call it 6-12 months, as you guys raise more money and continue to grow?
So in the next 12 months, we should grow this to be literally hundreds of thousands of dollars of monthly recurring revenue, because our revenue is increasing very quickly among practices and hospitals. And the overall goal over a number of years is to grow this company to be hundreds of millions of dollars of revenue. And I tell people I want to get there in a few years, which, full disclosure, is faster than I've grown any startup, including the one we took public. But I believe we can do that here because there's $800 billion a year of health insurance denials that right now are being done manually. So as soon as we get the word out there from what we're doing for these large practices and hospitals that we're executing on now, I feel we're the best kept secret in the business right now. As soon as we get that word out there, we have a number of other customers that will sign up. We can really grow this and grow it substantially and be a part of the fabric of the healthcare system in the United States.
Are you getting a lot of pushback from or questions from insurance providers, et cetera, just because of, obviously, claim data is very sensitive information? I'm sure there's a lot of HIPAA requirements you've got to go through. Like how do you kind of get over that hurdle, and how does that work?
So we have very little interaction at all with the insurance companies. We submit claims to them, but they don't really speak to us. When we sign up a customer, in the appendix of that customer's agreement is a HIPAA agreement. We will not take a single piece of data without that, because the head of the healthcare department at our law firm has told me that if we're not HIPAA compliant, the CEO can go to prison. And I'm the CEO, so that certainly gets my attention. So we sign a HIPAA agreement with a customer. They then can get us a back dump, as I alluded to earlier, of a year or two or three of their data. That data, as you pointed out, has personal health information in it. It's data about the claims and medical happenings of individuals. We treat that data very seriously. We use the Azure. It's all in the cloud on Azure, and it's on the HIPAA compliant area of Azure. Nobody looks at that data except if they're a signed Red Sky Health employee or contractor. So they're covered by our HIPAA agreement. And like I said, no customer is allowed to send us any data unless we have a HIPAA agreement with them. And we are very buttoned down. We use a number of cybersecurity companies and efforts to make sure that we are quite secure and that there are no data leaks and that we are HIPAA compliant. As a company, we are also SOC 2, Type 1 and Type 2 compliant. We've met the requirements for the high trust, which is the highest level of compliance. We haven't gotten the high trust certificate yet. That'll be coming in May.
Got it. Yeah, no, all those things are very important, especially from a HIPAA, but also from a cybersecurity and SOC 2, 1 and 2 compliant. That's definitely a very important thing as cybersecurity attacks continue to be a thing, and AI is making that stuff a lot easier. I guess as we wind things down here, I guess I want to go back a little bit to the kind of starting multiple or being kind of a part of a founding team of multiple businesses. I guess, because you brought up kind of the vibe coding, the one-person billion-dollar company that everybody's trying to seek for, what would you maybe say to earlier career entrepreneurs that are maybe in that position where they're trying to start a business and they're maybe wrestling with the idea of going it alone or trying to think about finding a partner? And then how do you vet that partner, right? Like, let's say you're the tech person and you need somebody that can be more operational or salesy. Like, how do you kind of navigate that relationship? Because it is kind of like dating, and then you're getting married because you're getting into a business and, all that fun stuff.
Yeah, there are a number of ways to mitigate that risk. You're absolutely right. When you found a company with a co-founder, you were essentially married to them for the period of time that the company is growing and building. Now, I certainly understand vibe coding and how AI can allow things that you couldn't do in the past. For example, at our company, we have a lot fewer software engineers than ever before because they're all using Cursor and their code's being written very quickly as opposed to the way it was being written before. But when you talk about that ideal that everybody says, oh, we're going to have billion-dollar companies that are run by one person out of their spare bedroom where they're doing vibe coding and they have a number of AI agents, but no employees. The strategy of a company and the way you build a company, the way you sell to customers needs vetting among a number of smart people. And that's why co-founders, in my mind, are a good thing. And I know that as an individual, I've occasionally tried to start a company on my own. It really hasn't worked out well. I know that about myself. There are others that might not think that way. All right. There are some exceptional companies in the world that have been founded by one person. Mm-hmm. So it's not absolute. There's no one way or one path to success. I will tell you that what I do with everybody in our company is nobody joins our company without vesting of their shares, whether they're a founder or somebody we hire, etc. You want somebody who's going to contribute to the company over the course of several years. I don't want a co-founder. Let's say you had two people and they were equal. So you split the equity 50-50. And a month or two later, the co-founder decides, no, I don't want to do this. I want to go do something else. They should leave with no equity whatsoever because they should have a vesting schedule over 4 years where they wouldn't have vested anything if they leave after a month or two. Yeah. And I've heard very interesting stories about startups that didn't work that way. I heard a story about two housewives who bonded over an idea on a soccer field where they were watching their kids play soccer. They started a company that became very successful. And according to the one, the last time the other contributed, it was on that soccer field, but she gave her half the company and there was no vesting. So that non-contributing founder always had a ridiculous amount of equity. That shouldn't happen. Whenever somebody is founding a company with somebody, I want my co-founders to vest. They should want me to vest. They shouldn't want me to decide, I'm not interested in this. I'll go sit under a tree in Hawaii and not contribute. If that happens, they should want to take my equity back and find somebody else who can bring in the skills that Dean Margolis has to help grow the company. So those are the ways you have to mitigate things. It takes a lot of conversations. You can't find a co-founder in 5 minutes. I used to go to a lot of hackathons and pitch meetings to listen to people who have early stage ideas and products, find people that I could help. I could help them grow the company, build the company. I bring skills they don't have. Usually the person who's a co-founder, who's young, that has an idea, either comes from that industry or is a technical person, but they don't know how to raise money. They don't know how to sell. They don't know how to create revenue from enterprises. These are things I've done my entire career. So it's a situation where, as you said earlier, 1 + 1 can equal 3 or 4 or 5 or 6 when you start a company if you have more than one person, not 2.
Yeah. No, I love it. I think it makes a ton of sense. Dean, this has been a lot of fun. Let's wind this thing down with a 3-pack of questions that I ask every guest. First question here is, what's an influential book or podcast maybe that you would recommend to the audience?
So I just came across this book, and I'm not even sure if it's published yet. The title of the book is Founder Unfriendly: What Investors Don't Tell You. It was written by Charlie O'Donnell, who's a guy that I know. He was a early stage investor in New York. He had a company called Brooklyn Bridge Ventures. And now he's mentoring and coaching venture capitalists and others. And it's really a very good book to see, especially for first-time founders, what investors think about when you pitch them, what they need to hear to invest in your company. Even myself, who's a multi-time founder, I found it really a great book.
Awesome. Yeah, I hadn't heard about that one. I'll have to check that out. Awesome. Second question here. Favorite thing to do outside of work?
I am an athlete. I run, I lift weights, I ski. I live on a lake here in Connecticut, so I water ski, swim, and stand up paddleboard in the summer. Love to just get out there and breathe fresh air and work out.
Yeah, no, love it. That's great. And then last question here, favorite vacation spot?
Any of the islands. I've been all over the Caribbean. I've windsurfed and snorkeled all over the Caribbean. Love to go to Hawaii. Those are where I tend to get away. And every time I've had an exit, I've taken off a number of months, traveled around, and really decompressed from that in that manner.
Love it. Awesome. Well, Dean, man, it's been great to meet you. Great to share your story. If people want to learn more about Red Sky Health or want to just connect with you, maybe they want to pick your brain about, choosing the right founder or co-founder, what's the best way to connect with you?
Yeah, go to the Red Sky Health website. My email address is dean@redskyhealth.com. Happy to hear from people. I mentor a number of younger entrepreneurs. And by the way, every entrepreneur is younger than me now, so that's fine. And happy to chat with people about things.
Awesome. Dean, thank you very much for being a guest. Appreciate it.
Excellent. Justin, thank you for having me on.
I hope you found at least one actionable insight from this episode of the Growth Capital Podcast, your one-stop shop for insights from private equity leaders, CEOs, and startup entrepreneurs on starting, investing in, and scaling successful businesses, as well as the role having the right talent plays in growing a successful business. It would be greatly appreciated if you would rate and review this podcast. And if you're watching on YouTube, please like and subscribe and drop us a comment so we can expand the audience of this podcast. Thank you for all your support, and don't forget about upcoming episodes dropping every Tuesday.